Alright, let's settle this once and for all. Trading versus investing. Which one is better for making money in the stock market? This is a question that has puzzled many for years. Both strategies have their own merits and drawbacks, and today, we're going to break them down for you. Are you a fast-action trader, flipping stocks like a pro? Traders often look for quick gains, buying and selling stocks within short time frames, sometimes even within the same day. This requires a keen eye on market trends and a lot of screen time. For example, during the dot-com bubble, many traders made quick profits by buying and selling tech stocks rapidly. Or a long-term investor, letting your money grow like a fine wine? Investors, on the other hand, focus on the bigger picture, holding on to stocks for years, even decades, to benefit from the company's growth and dividends. This approach is less stressful and can be more rewarding over time. Think of Warren Buffett, who has famously held on to stocks for decades, reaping substantial rewards. Today, we're diving deep into the battle of strategies, so you can decide what's best for you. We'll explore the risks, rewards, and time commitments involved in both trading and investing. Historically, trading can be more volatile and risky, while investing tends to offer more stable, long-term growth. Stick around, because at the end, I'll reveal a powerful hybrid strategy that combines the best of both worlds. This hybrid approach can offer the excitement of trading with the stability of investing, giving you a balanced path to financial success. Before we get started, hit that like button, subscribe to the Piggy Bank Chronicles, and turn on notifications so you never miss a money-making tip. Let's start with trading. Picture this. You're in a fast-paced casino watching the numbers move, making quick decisions, and aiming for short-term gains. Trading is all about timing the market. You buy and sell stocks, crypto, or forex within minutes, hours, or days. There are different types of traders: day traders, swing traders, and scalpers, each with their own style. Technical analysis is a key strategy, using charts and indicators to predict price movements. Fundamental analysis, on the other hand, looks at financial news, company performance, and economic data to make trading decisions. But here's the catch. Trading is risky. It takes skill, strategy, and discipline. One wrong move, and you could lose big. That's why 90% of traders fail. The emotional roller coaster of wins and losses isn't for everyone. Psychological factors like stress and overconfidence can cloud judgment. Effective risk management techniques are crucial to survive in the trading world. Now let's talk about investing. Imagine planting a tree. At first it's small, but with time, patience, and a little care, it grows into something massive. That's long-term investing. Instead of chasing short-term gains, investors focus on buying solid assets and holding them for years, even decades. Stocks represent ownership in a company and can offer high returns. Bonds are loans to governments or corporations, providing steady income with lower risk. Mutual funds pool money from many investors to buy a diversified portfolio of stocks and bonds. Investors love things like index funds, blue-chip stocks, and real estate. The goal? Let compound interest do the heavy lifting. It's a slow, steady grind, but history proves it works. Just ask Warren Buffett. He turned patience into billions. Plus, long-term investing offers tax advantages and the power of dividend reinvestment. These benefits can significantly boost your returns over time, making your money work harder for you. So, which is better, trading or investing? This is a question that has puzzled many. Let's break it down. Risk. Trading is high risk, with the potential for significant gains or losses in a short period. Investing, on the other hand, is generally lower risk, focusing on long-term growth. Time commitment. Trading needs constant attention, often requiring daily or even hourly monitoring of the markets. Investing, you set it and forget it. It's more of a passive approach where you can let your money grow over time without much daily involvement. Potential returns. Traders can make or lose big money fast, experiencing the thrill of quick wins and the agony of sudden losses. But investors build wealth steadily over time, enjoying the benefits of compound interest and market growth. It really comes down to your personality, goals, and risk tolerance. Are you someone who enjoys the excitement of the market? Or do you prefer a more hands-off approach, letting your investments grow over time? And how much time do you want to spend watching the markets? The choice is yours. For instance, take the case of Paul Tudor Jones, a renowned trader who made a fortune by predicting the 1987 stock market crash. On the other hand, consider Warren Buffett, one of the most successful investors of all time, who built his wealth through long-term investments in solid companies. These real-world examples highlight the potential of both strategies. Whether you choose trading or investing, understanding the risks and rewards is crucial. But wait, what if you could mix both? Some smart investors use a hybrid strategy. They invest 80 to 90% of their portfolio for the long term, while trading with a small percentage, maybe 10 to 20%, for short-term opportunities. That way they build steady wealth while still having fun with short-term trades. To balance a hybrid portfolio, consider diversifying across different asset classes. Manage risk by setting stop-loss orders and regularly reviewing your investments. This approach helps you maximize gains while minimizing potential losses. Alright, now it's your turn. We've covered a lot of ground today, from the basics of trading to the nuances of investing, but the real journey begins with you. Are you team trading, team investing, or somewhere in between? Drop a comment below. We want to hear your thoughts and experiences. Your insights could help someone else on their financial journey. And if you found this video valuable, make sure to like, subscribe, and share it with a friend who's still confused about the stock market. Your support helps us create more content to guide you through the financial maze. Until next time, keep stacking that wealth. Remember, every small step you take today can lead to big changes tomorrow. Stay committed, stay informed, and most importantly, stay motivated. We're in this together. For more in-depth content, check out our other videos and follow us on our financial journey. We regularly post updates, tips, and exclusive content to help you stay ahead in your financial journey.